I welcome you all to the webinar on accounts module. In this webinar, we will try and cover all the features we have on accounting module like chart of accounts, how to use perpetual and periodic inventory valuation system, how to manage your sales invoice, purchase invoice, and payment entries, how to do reconciliation and stuff. Let's get started with the most basic master we have in the accounts module, which is chart of accounts. So chart of account is a master wherein all your accounting ledgers are there. On creation of a new company, chart of account is set, a default chart of account is set automatically, and these are the few standard accounts. Uh, Also, you define some of the accounts like bank account and tax account at the time of setup wizard in your ERPNext account. So you can see that it has a tree structure, means you can create a group account, and under that group account you can create subgroup and child accounts. For example, let's take indirect expense for an example, right? Create a new group called transportation. Okay, so it has created a group, and under this we can add child accounts, say shipping expenses. And if you want to have this as a child account, then you need not check this field, is group. And then you can select an account type, say it is an expense account. So there are many account types. If applicable, then select an account type. If not applicable, then leave this field as blank. Now, in here, we can also discuss what the meaning of multiple currencies. So let's create this account for now. So this is how you can create group and child accounts in your ERPNext account. Now let's also check what is the meaning of multi-currency accounting. So let's say we have operations uh, of this company in multiple countries. The base currency for this accounts, if we can check in company, the base currency for this company is INR. It's Indian rupees, right? But let's say we also have one branch in USA, and we also have a bank account there, and we want to track balance in that account in USD and not in INR. So how do we do that? We'll create a new accounting ledger in bank accounts. Say Bank of America as a account. Account type would be bank, and in here we'll select currency as USD. So for this account, we'll get balance in USD as well as in INR. So one thing we need to understand here, that irrespective of accounts currency, the posting in general ledger would be done in the base currency. You'll get the report, you'll get the balance in the currency of an account. You'll get the reports, but at the core, the general ledger posting would for in this account would be done in the base currency of a company, which is INR. So let's we'll see that when we create a transaction. So this is about the core chart of accounts. It has four core groups: asset, liabilities, income, expenses, and equity is supposed to be part of liability, but as we have observed, most of the countries have equity as a separate head. So the same way we also have equity as a separate group, but it in the end, when you see the balance sheet, then equity will be shown under the liability. So that's about it, and let's see what are other features are available in the chart of accounts. Let's say we want to add a new company, right? And this company is say called HP Persona, for example. We define its abbreviation. Now in here we can define for this company, chart of account would be generated based on the standard template or based on the existing company. So in here, if you select say existing company, then you want which existing company. So if you select Gadget Technologies Private Limited, which is our existing company, So when we save this company, chart of account for this company will be generated on the same lines as this company. So the accounting groups and ledger which we have already created one company will be replicated for the new company as well. So this is the another functionality you can use if you use multiple companies in your ERPNext account, and if you want to replicate chart of account of one company into another company. So that's one thing. And then we also have an independent project called charts.erpnext.com. So if you think that the standard chart of account defined on the creation of ERPNext account is not working for you, and you have a dedicated chart of account as per your statutory requirement, then you can also contribute chart of account for your country from this portal, charts.erpnext.com. So this is the chart of accounts for France. One of our community member has contributed it, and so what we do, we keep on pulling changes contributed by community members from this portal, and then when someone creates an ERPNext account from France and selects country as France, then for them chart of account will be created on these lines, right? So you are, the cycle and the way it works is you can log in, you can sign up and contribute chart of account for your country. We will review it. If accepted, then we'll merge it in the product. And after that, once it is merged and released, then if someone creates a new ERPNext account, then for them chart of account will be set based on the uh, chart of account which was contributed here. How does accounting work in ERPNext? So there are two ways. If I take you back to the accounts module, we have many link for transaction like sales invoice, purchase invoice, payment entry. We have journal entries and everything. But to the core, we have two accounting systems. So in here you'll see this field, make accounting entry for every stock moment. If you check this field, it means that accounting in your ERPNext account will function on the basis of periodic inventory valuation system. But if you uncheck this field, then it will work based on I'm sorry, if it is checked, then it will work based on perpetual inventory valuation system. And if you uncheck, then it will work based on periodic inventory valuation. Both these concepts are different. Let's try both the cycles. Currently, perpetual inventory valuation is checked for this ERPNext account. So let's try one cycle and see what is the impact of transactions we make on an account. Okay, so little brief on the perpetual inventory valuation system. As mentioned in the field name itself, make accounting entry for every stock movements means the the stock transactions you make will also have impact on accounting. The purchase receipt will have impact on your current asset, and delivery note will deduct the value from your current asset and add it to the expense account. So let's try one cycle on these lines. So the very first transaction which we will try is actually in the stock module, which is purchase receipt. Right. So we can pull data in purchase receipt from purchase order, or we can make one directly as well. So I'll quickly add an item in my purchase receipt. Say its accepted quantity is 10. It has fetched the rate from the price list. So let's move forward with this. This is the accepted warehouse. We'll receive stock in this warehouse. And on top of this, we can also apply taxes and other charges. So let's say 18% tax is applicable. And then we can also apply other charges, say shipping expense. And if this is to be calculated based on actual, then we'll directly enter amount and not the rate. 15,000, then we have 18% tax applied on it, and then shipping charge of 2,000 is applied on it. Okay, so let's save and submit this, and let's see the impact of this on accounting ledger. So we can see that our store warehouse is debited by 17,000, because the total valuation of item was 15,000 plus 2,000 of shipping charges. So 17,000. Stock received but not billed account is booked by 15,000, which is the main the core value of the items we purchase. And we'll shortly see how this account gets nullified when we make purchase invoice. An expense included in valuation. Let's see where is this account in our chart of accounts. So let's go to chart of accounts. We go to expense, we go to direct expense, we go to stock expense, and we see that expense included in valuation is located on the expense side. Means it is a debit account, but it has a credit balance. If you can see here, it has a credit balance. What does this mean? It means that though we have added this expense to the valuation of this item, but since we have not added to total, it means that we'll be receiving separate purchase invoice from our transportation agent. And when we book, so we'll make a separate purchase invoice in our ERPNext account later on when we receive an invoice from our transportation agent. So actually shipping expense for that will be booked when we make a purchase invoice. But since we have booked this added this expense to the valuation, which means when we sell this item, motherboard, its valuation has become 1700. Let's say it's not 1500 but 1700. So when we sell this item, it will book 1700 in the cost of goods sold, but it has already booked the credit balance in the expense included in valuation, which means if we see the total group expense, it's 1700 minus 200, so it's 1500. So originally it will only book the expense of 1500 for this item, right? So we'll have the scope of making separate purchase invoice for booking shipping expenses. This explains what's the purpose of having expense included in valuation account. It will always have a credit balance, which means when we book it will be nullified if we see the group balance. Cost of goods sold minus expense included in valuation, the group balance will give us the more accurate cost of goods sold balance. So I hope I was able to convey that point. So let's move forward from here. So I'll quickly take you back to the account stock received but not billed, which was credited. Now if we see stock received but not billed account, it is located under liabilities, current liabilities, stock received but not billed. So currently it has balance of 13,000. Now let's make a purchase invoice against this purchase receipt and see the impact on this balance. So we have purchase receipt. Now we'll make a purchase invoice against this. No values to be changed. It has fetched all the required values from purchase receipt. Let's simply save and submit this purchase receipt. Now we won't check this as paid, so we'll see what the impact of purchase invoice on payables. So by not checking this as paid, we have assumed that this is the credit purchase, which means will pay to supplier in future date. So what purchase, the main function of purchase invoice is to update payables. If we see general ledger for this report, you will see the creditors account, and it has been credited by this much amount. So if we go to chart of accounts, if you see accounts payable group, you will see creditors. You see this? So it has booked the payable, means if we checked account payable report, this purchase invoice will be reflected there. So I think this is the purchase invoice which we just made. This is the amount. Paid amount is 0, so the total amount is outstanding, right? And the other impact it had is it debited stock received but not billed by the same amount. So our stock received but not billed account is nullified. So the purpose of stock received but not billed account is only to track what the total value of items for which purchase receipt has been made but purchase invoice is yet to be made. So in purchase receipt, this amount was credited, but when we make purchase invoice, this amount is debited by the same value. So overall, the balance in this account gets nullified. And then we had GST tax. We applied tax GST on net total, right? So tax was also booked. And now let's complete this cycle by making the payment entry. So in payment entry, we select payment amount. You can select mode of payment based on which the bank account and stuff will be updated. So I'll just select say cash for example. So cash account is updated from cash account is updated here. Otherwise, if I select another account, uh, say check for example, so my bank account is updated here, right? So in the mode of payment you can also update the relevant default payment account in the mode of payment master, and then payment amount will be updated based on this purchase invoice amount, and then we can enter check reference and check date just for the acknowledgement purpose. So if needed we can go back and check. So we can simply save and submit this purchase invoice, and if we go back, then we can see this purchase invoice is paid. So this is what we have on the purchase side. Item is added, and as you notice, when we made purchase invoice, item was added in our current asset account, which was stores account. So on the asset side, we have accounting ledger for all the stock accounts. So when we purchase an item, its value was added in the store's warehouse. So till now, you can observe that no expense was booked for the purchase we made till now, right? So when exactly purchase is booked, so that is booked when we sell this item. So let's create a delivery note. Let's assume that we received an order from our customer for the same item motherboard. So how do we stock out? It's possible that we made a purchase or sales order on receipt of order from the customer. If needed, then we can pull details from sales order. But let's quickly create a new delivery note right away. So I'll select same item, say its quantity is 10. Now sales rate, let's update it to 1800 with some margin. Okay, so if we directly edit the rate, then it considered it to be the negative discount. The another way we could add our margin would be say 20% is our margin. So based on that, it has updated the rate from 1500 to 1800. So this is one approach. If you are using your buying price list on the sale side as well, and you just want to add your margin, that's one thing. Otherwise, you can also have a dedicated price list on the sale side, wherein 1800 will be added as a price list rate, so you won't have to add margin manually, right? So we have item with rate, and then we have a GST applicable once again on the sales side, as well. So that is applied, and now let's save this item. So let's see what the impact. So once we save, now we see these field: expense account, cost of goods sold, and then we see a cost center, right? And it says that we have the stock available for the stock available with us is 18 quantity in our warehouse. So it also deducts stock based on moving average or FIFO. That is a true value stock valuation method. By default, it is FIFO. So let's see. Now it is. It should show the valuation rate, but I think it will come in version 8. So let's submit this delivery note and see its impact. So delivery note submitted. Now let's see the accounting ledger, and in here we can see that it has booked the cost of goods sold of 15,400, and also so cost of goods sold is our expense account. It's under expense, stock expense, cost of goods sold. So this account was debited, and stores, which is our current asset account, stock assets, stock assets, stores. It is our current asset account of type debit. It was credited, means balance was reduced from stores account, right? So that's what the impact of purchase. I'm sorry, the delivery note is in the case of perpetual inventory valuation system. So now ultimately, when item is issued out of our warehouse, its expenses also booked, and then we have purchase invoice which is being made against a purchase. Then we have a sales invoice. I'm sorry, we make sales invoice against a delivery note. Yeah. So all customer details are fetched, item details are fetched, taxes will be applied as it is. What does sales invoice do? Okay, so I'll switch to another series on submit of sales invoice. Just like on the purchase invoices, assume that it is a accrued based purchase. Same way on the sales invoice, by default it will assume that it is accrued based sales. Means the customer has not paid you yet, so it has to update payable. So you see the debtor account is debited. So this debtor account is actually your accounts receivable, a default debtor account, which is debited on submission of purchase, on submission of sales invoice, and then it has booked sale, then it has also booked it has booked taxes, it has also booked the sales. So sales is your income account. If we check our income group, direct income, sales, right? So this sales is our income, which is credit account, and it was credited, means balance value was increased. We booked the income on submission of sales invoice, and sales invoice, in the sales invoice, income account is defined for each item in this section, right? So if you you can have different income account also selected in here. You can define item wise income account if needed. So that's the thing, and then you can also use cost center for tracking budgeting or this is it. We have purchase invoice. So now if we see accounts receivable report, we see this purchase invoice is reflected here with the amount. Invoice amount is this, paid amount is zero, so the total amount is outstanding. So let's assume that we received payment from the customer, so we'll make a payment entry. Now in here I would like to emphasize a bit more on payment entry. So when we click on if I go back to sales invoice and if I click on payment entry, then it will fetch details of that purchase invoice only. The outstanding amount is updated as paid amount, sales invoice and other details are updated. It's very much possible that customer will pay you at once for multiple. Is if you had multiple sales invoices from the customer which are outstanding, so you can pull all those sales invoices at once and adjust against and adjust in one payment entry, right? So once we submit this payment entry, then we can see that debtor account is debited, and debtor account is credited, means payables are receivables are reduced, and we have this amount added in our bank account, which is our payment account. Okay, so what it has assumed that this unallocated amount, I removed the additional row, but I didn't reduce the payment amount. So the additional payment amount actually has been added as credit, means advance received from the customer. So how a discount applied to customers' payments? So in ERP Next, you can apply discount, but accounting entry is not made for the discounts you offer. For example, if I make a new sales invoice, I'll select customer, and then I'll select an item. So in here it has fetched the rate. So prices rate is 1500. If I offer 10% discount, so the price becomes 1350. So when I submit this purchase, this sales invoice, the posting in my receivables account, in income account, will be for this much amount, which is discounted amount. So the discount which you offer to your customers won't be reflected in the accounts. The another way you can manage it is mentioned in. I mean, if you want to have discounts reflected in your chart of accounts, then you can, let's say, you can create another account in your chart of account master, say as an expense account, indirect expense, add child, discounts offered, account type is expense account, create new, right? And now in here you will be able to select discount offered, sales rate would be minus 10%, right? So this way, when you submit this, then it will do the accounts posting in this account of 150. So you can just try that cycle if that works for you. And but the idea is the discount feature which we have, as per the standard, it doesn't have any impact on accounting. We calculate amount after discount, and then accounts posting are account posting is done for based on that account only. And we have jazz query. How can we set up creation and mailing of reports automatically, like account receivable report? So we have auto. So there are two things. Let's say you want to alert your customer, and for that you can set up an email alert in ERP Next on these lines, that sales invoice is outstanding. Set alert on say days before. It will be on sales invoice document. It will be based on say due date. So 2 days before due date of an invoice, you want to send an email to your customer. And in here you can also type in your message. It has to be in HTML. So if there is sales invoice which is outstanding even 2 days before due date, then system will automatically trigger an email. This is one thing. Then you want an email to be triggered for your internal reference. Then we have another feature called auto email reports. In here you can see, say which report you want to be emailed. Say it's account receivable report which you want to be emailed, and you can then also specify who will receive it. So you can select your email ID here, right? And then you can save it. And in here you can also apply, say if you have multiple companies, then for which company you want to receive it, what would be the filter which are available in the reports will be visible here as well. So you can also set the filters. And then you can also set the message for yourself, so when you receive you can easily identify. You can also define the format in which you want to receive this report, right? So these are the options available. So hope this answers your query. Can we do this for custom reports? Yeah. So in this field, all types of report will be selectable. So you can also do this for custom reports. You can just check and try. So how to credit opening balance for customers is adjusted with invoices. So there are two ways you can update receivable from the customer as an opening balance. You can make a new sales invoice. The sales invoice you can select the customer. In here you will select the item for which outstanding is there. But in here in the sales, instead of sales account, you will select temporary opening account, and rest of the things will remain same. So later on when you receive payment from the customer, you can make a payment entry against the sales invoice. That is one thing. Now, if you want to update payables, that you don't want to do an item-wise sales invoicing for your outstanding, so you can make a new journal entry. You can select a debtor account, and then you can select a party. So this is the customer, and on 1st of Jan, let's say, total receivable from this was this much, right? So if you make this kind of entry, so you'll be able to adjust this in future payment entries. In future, when this client makes payment, then you'll be able to knock off against this journal entry. So if you check make payment entry option, in here you select customer and you select party, accounts paid to say standard bank, and then in here you'll also find option to select journal entry. Right, in that journal entry, you'll select the journal entry you made for updating opening balance. So I hope that answers your query. There's query from Santosh. What is stock adjustment, stock valuation, and cost of goods sold when they are used in perpetual and in the nutshell, these are the adjustment accounts. Stock valuation account is an adjustment account. Cost of goods sold minus stock valuation account gives you more accurate cost of goods sold. Only the valuation of items which you purchased. But if you just look at the cost of goods sold accounts balance, then it will be mostly valuation of item plus other expenses which you incurred. Then how can we put item wise tax without modifying item master? That's not possible for now, Prashanta. If you want to add multiple items in your transactions, either sales or purchase transaction, but each item is to have different tax rate applicable on it, then you'll have to define tax rate in the item master. Then Onkar is asking, can we be able to say specific chart of accounts for company wise? I think it's already there in the chart of accounts master. You have to select a company. So at a time you say chart of account for one company only. If I switch the company, then you will see chart of account for another company. And then we have another question from Gary. How can we do general payment entry like rent, water, etc.? You can directly make journal entry for it, wherein you can select an expense account. Say I don't know if we have an account for rent. Say freight and forwarding can be one expense. Since it's a debit account, it will get uh, debited when we are booking expense. And then in here you will select your cash or bank account, which will get credited. So it's a simple journal entry. So I hope that answers your question. Can we do intra company transfer like debit bank and credit cash account? You can, I think you are referring to contra voucher. That is possible. So in journal entry, there is an option for contra entry. You can move balance from one bank account to cash account, or bank to cash, cash to bank. You can manage such entry in journal entry, but it will be for one company only. It's not like if you have multiple companies in ERPNext, then you will have one company's account debited and another company's account credited. That's not possible. Both the accounts should belong to same company. So last query we received for this session is from Kerry. I started using ERPNext on 15 March and entered stock as at that date, let's say 15,000. Then I put some backdated entries, and can ERPNext revert my stock valuation back to 1st Jan if I put all the back entries from 1st Jan to 15th March? It does reposting. For now it does yeah, it do reposting if you started on 15th March, but later on you also update the stock valuation on 1st Jan, and your stock valuation is based on FIFO. So even if you made delivery note and if they are submitted, system will do a reposting in the backend, and it will stock out based on the valuation of items you added on 1st Jan. So currently it does reposting. Currently it does manage and do repost if you have made a backdated receipt or opening entry. So I hope that answers your question. And take you back to account settings. In here, I indicated that if this field is check make accounting entry for every stock movement, then it will do accounts posting for stock transactions as well. But let's assume that we are a service company and our stock transaction doesn't have much impact on the accounting, or you don't want to track real time expenses. We want expense to be booked as soon as we purchase it. If that's the case, then you should disable this. But please be very careful with this setting. If you have already enabled it, then just don't just uncheck this field, because it can have a great impact on your complete accounting balance, all the account balances. So please be very careful. But I'll temporarily disable this. So please be very careful when you are checking or unchecking this field. If you have unchecked it, but if you want to check it, then there's a whole process how you can migrate from periodic to perpetual, on for which we also have a help page. So I've temporarily disabled it, and quickly create some transactions, and we'll see its impact on accounting, right? So now, as per the periodic inventory valuation system which we have activated in this account, the the stock transactions won't have any impact on the accounting. If So I'll quickly make a new purchase receipt, just to show you its effect. One quantity, save, and submit. So in here we don't see any accounting ledger, we only see stock ledger, right? But if I make an invoice, purchase invoice against this, I'll specify an expense account in here. So now, as per the periodic inventory valuation system, expense for an item is not booked when you sell it, but when you purchase. At that point itself, you can have expense account booked, which means you don't have any current asset account in between which is getting affected. And as soon as you purchase an item, its value will be booked in the cost of goods sold account. So if I submit this purchase invoice and see its accounting ledger, it's pretty straightforward. Expenses booked against payable, right? And I can also knock off the payables by making payment entry. This is the payment which we are making to customer, total amount. So we'll simply, okay, reference details are mandatory fields. So we'll simply save and submit this. So this completes one purchase cycle. And now, what's the drawback of this? As I have mentioned, that you won't get a real current asset balance in your ERPNext account. But you might need to do a reconciliation. I mean, let's say you purchase this item, and at the end of fiscal year, it will reflect in the cost of goods sold, which won't be accurate. So maybe you'll have to make one journal entry of shifting the value of all the items you have in your stock from your expense account to your current asset account. So if you want to see what's the current total value of items in your warehouse, you can refer to stock balance report, you can refer to stock ledger report. There are various reports, and based on the value you find here, you can create a journal entry wherein your cost of goods sold account will be, so it's a debit account. So if you want to reduce its balance, we'll credit it by, let's say, 50,000. That's the total of current asset you have. And then you can create a temporary or internally create another current asset account, right? And then you can select that account and debit that, right? So this is the one adjustment entry you'll have to make from time to time. You can make it every week, every month, or at the end of the quarter, at the end of the financial year, as per your accounting requirement, to move balance of stock in hand item from your cost of goods sold account to the stores account. So this is pretty straightforward now. Just like purchase receipt didn't have any impact on the accounting, delivery note also won't have any impact. So we can directly make sales invoice. So sales invoice again will be pretty straightforward. income will be booked, and payable or receivable will be updated towards the supplier. The receivable will be updated towards the customer. I'm very sorry. So I'll save and submit this. Close accounting ledger. So we can see that our receivables are updated, tax is booked, and income of this much amount is booked. So it's pretty simple. And then against this sales invoice, will make the payment entry. Okay, so I think there's one question which we can quickly answer: how to make a partial payment. So now, since we are also already making payment entry, and the invoice amount is this much, 1770, but customer makes payment of 1500, so we simply reduce the payment amount. And if you reduce the payment amount, you can notice that allocated amount is also reduced automatically. Right? So okay, so I'll enter the reference number. Save and submit. So payment entry is submitted. Now if we go back to sales invoice, it still shows as unpaid because there is still outstanding of 270, and we made the partial payment entry of 1500 only. Right. So hope that query is also answered. And then we have a couple of standard reports and tools. We have seen account receivable, account payable reports. We have a point of sale for the companies into retail business, so you can make your invoicing faster. We have conducted one webinar earlier for the retail business on how to use this whole feature. So maybe you can refer to that. And then we have standard reports like general ledger report, trial balance report is available as well. But in this trial balance, actually, since we don't have a separate receivable and payable account for each customer, we have a separate account, trial balance, for parties. Right. So maybe if you want to check party wise trial balance report, you can check this report, trial balance for party. Then we have gross profit report, wherein you can check invoice wise gross profitability. You can check item wise profitability. So these are the standard reports, and you can also make custom reports. And the another point I would like to highlight, and there was also a question from Prashanta. Can we set cost center wise? Can we set cost center wise chart of accounts? Can we set cost center wise chart of accounts? Confused, Prashanta. So both these are independent masters, and the idea, I mean, I'll just give you an example. Let's say how you should use cost center. So let's say you're based in Assam, right? And you have one expense account for say advertising, and you're advertising in Delhi, you're advertising in Mumbai, and you're advertising in Bangalore, right? So how you should set up your chart of account and cost center is like your advertisement expense account will be single indirect expense account. So advertisement for advertisement expense. So there'll be only one single expense account, and then in the chart of cost center, you should add all your locations like Mumbai, Delhi, Bangalore as a cost center, and against that, okay, let me add one. So let's say Mumbai is one of your location. You can add it as a cost center, edit it, and in here for Mumbai location, maybe you can create a budget that advertisement expense or a budget for advertisement or administrative expenses say this much, right? So this is the idea, or ideally how you should use cost center, and how this is how you can set up your budgets against a cost center. So I hope that answers your question. Yeah, so I think I use the same use case as mentioned by Jay. So and then we'll take query from Will. In the example of partial payment, could you allocate that amount to a write off account or discount account if it were authorized? So payment entry has some option for deductions. So I'll open new payment entry form. Then paid to Standard Bank. So let's say allocated amount is 24,100, but I enter, or okay, this is fine. But in here, let's say I enter 1,000. So it will show a difference of 500. And if there is a difference, then you can write off in this account. So you can just select a write off account or a round off account in cost center, and just write off the balance amount. So I hope that answers your question. Okay, can we track sales and revenue by cost center? I think, yeah, you can very much do that. So for each location, if you want to, I mean, track territory wise sales and revenue, you can create territory wise cost centers, and in the transaction you should ensure that based on the customer's location you are selecting the relevant cost center, and that will give you the report. So based on the territory or branches, maybe we can set up cost centers. Uh, Yeah, you can assign territory, but you cannot assign cost center. So cost center will have to be selected by the user who is making that sales invoice. So in customer master, you can define territory, but territory and cost center master is not linked. So you'll also have to basically, have some way wherein based on the customer's territory, user will select the cost center correctly. How can we receive advance from customer? Just make a new payment entry. Just make a new payment entry, select the customer, enter the payment amount. No need to define references if it's an advance payment, and then you'll be able to allocate it again in the sales invoice. So let's say this is the one advance payment entry. It's not allocated against any sales invoice. And now when I'm making new invoice for the same customer, Earth Foundation, so I won't select item, it's not mandatory. Okay, so income account is needed. And now we have a tab for advance payment. So if I click on get advance received, it has fetched that payment entry of 1,000. So I just need to allocate the payment amount. So I just, let's say if you want to allocate only 500 from this advance payment entry, so accordingly you can enter the amount. So when I save and submit this sales invoice, it will be paid by default because there is no outstanding. We have adjusted payment against the advance. Okay, so with this, I'll take leave of everyone in this group. Please keep your suggestions coming. Hope you found this session useful. Thank you very much for attending. Thanks. Take care. Bye.